Embrace this volatility. Hi, it's Charlie giving you today's video. So we're going to be looking at specifically at the stock markets today, given what's been going on. So we're going to talk about, where we're at, what the potential is, looking at the volatility itself, and where are the opportunities going forwards. So firstly, though, earlier this year, in the last couple of months, I've done 2 YouTube live broadcasts. And in those live broadcasts, I was talking about my concerns for the stock markets. And long before all of this kicked off. So if you can always go back over the live tab and look at those live broadcasts. But we shorted in my trading room with my traders and on the app and all of that back on the 21st of February. And we're still holding shorts right now, and so we have banked some profit along the way at 5,500, but still holding shorts right now. So it's been a really good run on this. Did I know that this was what's going to happen? No, you never know that sort of thing. I was very cautious towards the stock markets. Why? Well, let's have a look at just a couple of examples here. This came out in January. Record stock market optimism. The percentage of respondents who think stocks will be higher. Or when you're looking back all the way back to 1988, and we've got this record optimism. The whole AI story. The AI is going to revolutionize everything. And don't get me wrong, AI is going to revolutionize everything, but so did the internet, and yet we still had the stock market bubble of 2000, of course, and the tech bust. So that was one. Then we had articles like this: stocks could gain another 20% in 2025. Embrace the bubble. So there was just a lot of euphoria. And my favorite one, which actually came out in middle of October, was this one in The Economy. The envy of the world, America's economy, a special report. So all of this was building coming into this year. Then we had things like breaking down in November and December of last year. So all of that was building. Then we had technical divergences coming up into this very long-term trend line. You can see it's going way, way, way back to 2018, this trend line here. And then we had technical divergences as well. So it all added up to, yes, more than enough reasons to take the trade. So here we are now, though. What next? What are we looking for next in the markets? I'm going to go to the volatility index, the VIX, first of all. So the VIX is a really useful indicator of, it tells us not only volatility, but it also tells us when volatility is spiking into some serious levels, which it is doing right now. One of the things that I talked about with my traders just last month was the volatility spike that we had in March on the leg down previously. I'm just going to let's get that pen back here. There we go. So when we pulled back, when the stock market pulled back here into this low, it wasn't a very big spike in volatility. Yes, there was a lot of fear out there, but the volatility index at that point was not particularly high. I've been saying that you need to see volatility get sort of into the 35 to 40 zone by historical standards to be getting into a decent area. So let's actually come out to a weekly chart of this volatility, zoom back a bit so we can actually see what I mean here. So once we start getting into this 35 to 40 zone, you can see where we're capturing lots of spikes, and obviously you've got the COVID spike here, and there are other periods of time, even this huge spike that we had in August just of last year on that very sharp short correction. But we hadn't actually spiked into that back in March, just a month ago. So zooming back in, if I now take this to the daily chart, that was a bit problematic for me, and we were holding on to our shorts. Now the volatility index has closed at 45. Going into the weekend, when the stock markets have closed pretty much at their lows, this is both a concern, but also probably means we're getting closer to a low. And I have to be really careful of saying this, because you can try and be a bottom picker here. If I look at the SPX here and think, oh, that's it, it's gonna bounce, it has to bounce. But just because volatility is getting stretched there doesn't mean to say that this couldn't go again. We could have a mini crash on Monday. We could crash. We've closed at the lows, volatility high going into the weekend. Unless Trump says something good at the weekend that helps soothe the markets, then we could end up with another follow through on Monday. So, but all I'm saying is, from a sentiment perspective, we're certainly getting into the right sort of area with regards to the volatility index. Now, that could spike further, as we've just shown, that it could certainly go a lot higher, but it's certainly getting into the right place. We've got a lot of fear out there. All of that usually means that we're getting closer to a low, but you have to be very careful that we could also crash. So I think the point is, you don't need to try and catch it. If I bring up a sentiment measure, then we would no doubt see loads of people trying to pick the bottom, and it does concern me when you see movements like this in the stock market. I'll bring this back over to the futures so it fills in the gaps a bit more. But because I know what traders will be doing, they'll be constantly trying to fish for bottoms and just getting crucified around the world at the moment. But you don't need to do that. So don't think you've got to try and find the bottom. It's not necessary. So if you're a longer term investor, the stock market is down now. The S&P is down 17% probably at the moment. Let's have a quick look. Let's bring the price range tool up, or roughly bring this up. Yes, nearly 18% for the S&P. The Nasdaq has gone into bear market territory now. So if you're a long-term investor, now is not a bad time to start buying, for the long term. Even if we collapsed another 20%, well, in the grand scheme of things, you look back through history, well, you as a long-term investor, you've got a different view of the markets, and you're finally getting the stock market correct. And so you might be saying, yeah, I want to start dipping my toe in the water. That's different. We're talking about trading here. So from a trading perspective, when you've got proper risk on, do you really want to be just trying to bottom pick? If you've got a stop loss and you've got a given risk on your trade, that's fair enough. But what I'm talking about is a lot of traders out there will be trying to pick the lows, maybe not even using stop losses, and getting themselves into all sorts of trouble. So you don't need to do that. What you have to ask yourself is, well, do you think the market's got the capacity to come lower? And right now, the ingredients are there that the market does indeed have the capacity to still come lower. This will sort itself out in the months ahead, I'm sure. I'm optimistic that negotiations will be done to some degree or another. If negotiations are not done, and and these tariffs stay in effect, then the damage will be greater, whilst the stock market has a paddywhack, and so the stock market will continue to sell off if that's the case, and we go into a proper global sort of trade war environment. So without any concessions. So at the moment, you want to be a seller on rallies. Now there will be rallies, and I still think at the moment, even if there's some soothing words that come through from Trump, perhaps over this weekend, or that it looks like at some point there may well be some concessions, we will get bounces coming in at certain times, like there were bounces in the tech bubble crash of 2000 to 2002. So there will be news that will come out that will create bounces, but those bounces will still need to be sold into. We're going through an adjustment here, an adjustment phase, coming off a stock market which was actually highly valued anyway. plus all the AI bubble, so to speak. It's not that the AI is not the future, but certainly as a valuation standpoint, maybe we're in a bit of a bubble, as we've already seen, China being able to replicate what America's done far cheaper, etc., etc. So bounces are going to be there to sell into. So rather than trying to catch a given low, maybe just set your stall out and put your head around, okay, you want to be a seller. Okay. And that's how I would look at it. So I'm not interested in trying to catch a low as a trader. All I'm interested in is, okay, where would I also sell into? Well, let's have a look at a couple of options here. So firstly, where are we looking or for the stock markets to go to? So if I come out to a monthly chart, first of all, we've got this very clear definitive level here at around about 4,800 for the S&P. That would put the S&P into bear market territory overall. It's only at 18. It's already at 18% down currently, and as I've already said, the Nasdaq's already into bear market. Now, it could be that as of Monday, the S&P was down 300 points as of Friday's close on Friday. Well, another 300 points from where we close would see us down at 4,800. 250 points would see us down there. So it's possible that we could even see the stock market get down to that 4,800 area at the beginning of next week. But if it doesn't, and we were to bounce, then there's your game plan. So there's certainly the next level technically here. Now there's going to be plenty of other levels to look at as well. So you can see I've got a historical trend line crossing up through these lows, which the S&P is edging towards as well. On the weekly time frame here, it's even on the weekly 100 moving average. So there is certainly scope for bounces. So what we're looking for is, if we get bounces, can we short, and where to? So I would be arguing, this is on the cash index of the S&P. This trend line down here, just a little bit below 5,000, around a bit below 5,000 really overall there. Actually, yes, that's about 4,900 or so. And then that 4,800. So there's plenty of meat on the downside if we get bounces. So where to look with regards to bounces? Right, so I'm going to put this back onto the CFD future here. I think it may well be a big ask for it to bounce back up to 5,500, but it might do. But I think that may be a little bit far away if you're looking for a level from where to short. However, 5,400 looks reasonable. Now again, this is on a swing basis. There'll be other traders will be shorting intradays and off of other levels. I'm talking about from a swing perspective, where is a good level where other sellers are likely going to be coming in. You're going to be looking at this 5,400 zone. Yes, 5,500 would be another level, but in the first instance, 5,400. If it reacts to 5,400, you can always start to manage your stop and then see if it rolls over from there. If it doesn't and it comes higher up to 5,500, you can then, and you get stopped out, then you can put another short in up there and repeat the same process. That's the sort of process that I follow. Don't worry about getting stopped out. You still need to have a wide enough stop that you're not too tight on your stops, but at the same time, yeah, if you get stopped out, reset, go again. Now, another level that I've had, or levels, technical trend lines that I've had on the S&P are, there was a bit of a channel, and I'd only put it on my charts yesterday morning. So if I bring this channel up, there we go. So I had this channel just yesterday morning, coming into yesterday, and in real time, if I put this back into replay mode, so if I just get rid of yesterday, this is where we were at yesterday morning. And I'm saying to my traders, well, we might get down to this lower trend line today. Yeah, we more than did that. So let's just get rid of that. Now, what happens is when you've got a channel like this, in this instance, a declining channel, we've gone way the other side of it. Okay, and we've got something similar on the Nasdaq here as well. So the Nasdaq, we've got this nice channel developing, and we've gone the other side. So again, a slightly more aggressive trader would be looking. Don't try and catch the bottom, a low. Look for the markets at the moment are still going to be tentative. So if they do get bounces, those bounces will exhaust and at least try and do some sort of retest back to the lows again. So look at these channels as well, and I'm going to be looking at these for levels. We've got the mid channel line. Now, although it doesn't matter that the Nasdaq's come outside of the channel, more often than not, we do end up coming back in. Or so we've got a mid channel line here, and now obviously we've got the other trend line here as well. So these are going to be important both for the Nasdaq and for the S&P. The S&P actually has come through its channel a lot further. So I think just coming back up to the channel line wouldn't be enough. So again, probably the mid channel line as a minimum. I've already talked about 5,400 when I just looked at the SPX, the cash market. But when I've just got the CFD, which is essentially the future here, on, then we've got this mid channel line. Depends on how price rallies, if we do get a rally, but I think it's again these are levels to have on your charts, and of course the other trend line as well, the upper trend line, to look at. And then it's just a personal choice based around the price action, what's going on, as to whether you want to sell from a mid channel line here or wait for the upper channel line, and that then comes in potentially with that 5,400 area. But whatever way we slice it, there's a whole zone here for the S&P. This is the whole sell zone for the stock market. So that's how I'll be looking at it. I'm not trying to catch a low. I think if you're a long-term investor, yeah, you might start dipping your toe in the water as a long-term investor, because that's very different. But as a shorter term trader, I'm not saying that you can't try and pick a bottom, of course, but I think that the problem that with most traders is they spend too much time trying to do just that, rather than saying, do you know what, I'll wait, I'll be patient, I'll wait for a rally, and then I'll look to short the rally. So for the time being, the backdrop, the fundamental backdrop, has not changed. So, and even if the tariffs are reined in to some degree in the weeks ahead, they may well not be. But if there are negotiations to be done, and we start to see that, and that allows the stock markets to bounce, more often than not, the stock market, even if we get a rally and some more encouraging news coming out, more often than not, there's usually a retest. So sellers will come in. Bear in mind, we've still got the potential for a dramatically cooling US economy based on other measures that are going on anyway. The lowering of immigration, the changing of the labor market with Doge. There's lots of tightening conditions going on at the moment, which further down the line with some of the cutbacks that the US are making will inevitably be good for the US economy. But in the near term, we're in this phase at the moment whereby rallies should be sold into. Sell the rip. And there you go. That's the end of my video here today. Enjoy the volatility. Don't try and catch the bottoms. Doesn't matter even if the market does bounce and you think, oh, I missed out. It doesn't matter. Trying to catch the lows is a fool's errand. You could have been trying to catch the lows at 5,300 just yesterday, or 5,400, and and look what happened. Now, again, I have to say that if you're using risk management and using stop losses, it doesn't matter really. But don't sit there trying to take 20 trades a day where you're trying to get on the long side. That's the problem that a lot of traders will have. So look at it overall, sell the rip, and don't buy the dip. And that's my advice. Have a lovely weekend. I'll see you next week.